What's going on, guys? Between them, they have almost 7 million subscribers on YouTube. They just started a collaborative channel. It's called Millennial Money. Who am I talking about? I'm talking about Meet Kevin. I'm talking about Graham Stephan. I'm talking about Andrei, Jikh, and talking about Jeremy from Financial Education. So what am I doing? I'm going to do a clip right now. And at the very end of one of their most recent live streams from yesterday, at the time of this recording, it is Wednesday, March 10th. It is Wednesday, March 10th, 21 years ago. March 10th of 2000 was the peak of the NASDAQ at the time, which then was the start of a stock market crash until October of 2002. But anyway, so today is March 10th, 2021, and they did this recording yesterday, March 9th, 2021. And they play a game, and Jeremy asked them if each of them could have one stock and only hold on to one stock for the next 10 years and not sell it. Each of them have their own answer. So I'm going to go ahead and take you into this clip so you can see what it is after a lot of banter about various financial subjects, a lot of it including Bitcoin. So let's go check it out. That's not it. All right.
And that's the thing, like the days where everything is going up. I have like the index fund category, and then I have the equities of individual stocks. They swing wildly. I mean, one could be up 100 grand, and then the S&P 500 is up 20, and that could very well be flipped. One could be down 100, and one's down 20. So, you know,
let's play a fun game, okay? We'll go round table on this. All right, you got to put every dollar you have in one stock. You're forced to do this. There's no way out of this. And it can't be like, let's put it in an index fund or something like that. One individual stock for the next 10 years, and you're not allowed to sell it. And it's only one stock. What stock are you putting that money in? Let's start with you, Kevin, and we'll go round table here.
I mean, it's hands down. It's Tesla. I worry that's maybe a boring answer. If it wasn't Tesla, I'll just give one backup. It'd probably be something, you know, it'd be like probably Apple, honestly, would be Apple or Amazon. Not the big growth, but I have confidence there'll be growth over the next 10 years, you know.
Andrei, what would you do?
If I can't pick VTI, which I think is the answer should be for most people anyway.
VTI.
Then yeah, I would go all on.
I believe VTI is the Vanguard total stock market. It's an ETF, right?
Apple. That's what I did this past week. Yeah.
Okay, so we got Tesla and then we got Apple. Okay, and what about you, Graham?
AMC.
Total stock market index fund Vanguard.
Google. I would say.
Google. Wow.
Gurgle. I went to Gurgle.
So we got a Tesla, we got an Apple, and we got a Google. This is getting pretty intriguing. And I would go with Facebook. Facebook. Oh. Yeah, Facebook is the safest risk reward for the next, I feel like 5 years or so.
I know you're really bullish about that, but privacy, man, I don't know.
Yeah, no. It is what it is. I mean, it's just really, really undervalued stock at the moment. They got still massive revenue growth ahead for years to go in the future. So, but
Google, like, here's, like, everybody knows, and I saw your text stream about this with you guys earlier, but at least some of this from like 2 or 3 days ago. You're thinking that this adpocalypse or whatever at Facebook, basically, where Apple's stripping their data, isn't going to affect Facebook so much. And obviously elaborate on that. But, you know, isn't it possible that Facebook's potential as an advertiser is priced in, whereas maybe YouTube's potential as an advertiser is not priced in, or something that Graham holds dearly?
It's a good question.
Yeah, I mean, first off, I love Google. Google's going to continue to grow for years and years to go in the future, in my opinion. The only threat to Google really is like if voice search really takes off in a major way ever, which I don't know if it will. But if that ever was to take off, that's the real only huge threat, I feel like, for Google in terms of Google search. But I mean, Facebook, you know, at the end of the day, like whether, you know, they don't allow Facebook to get a certain amount of data or something like that. Like if you're advertising, you still got to advertise on Facebook or Instagram. I mean, you could go YouTube as well, YouTube's definitely an outlet. Google search is super expensive nowadays. 15 years ago, Google search was super cheap. I don't know if anybody's ever tried to like keyword up things now, but it is crazy expensive. So if you have a small, mid-sized business, like Instagram and Facebook, that's where you go. Like, where else are you going to go? Yeah, you could do some YouTube as well, but Facebook and Instagram, and you can't, you can't run a television ad or radio ads, and that's just silly anyways. A billboard, like, come on, man. So
you basically think Facebook has a monopoly and Elizabeth Warren's going to swoop in and screw you up with antitrust.
Well, the thing is, like, the sum of the parts at Facebook's actually much more than the company's trading at today. If you were to break apart Facebook from Instagram and WhatsApp, that you're well over $1 trillion. So that's another thing. And also, if they break apart Facebook, are they not going to break apart Amazon? Are they not going to break apart Apple and these other conglomerates, Google? You know what I mean? Like, that's something to factor in. So, that's another thing is, like, are they really going to break apart them? Because you just open up a can of worms, then you got to break up potentially Microsoft. You know what I mean? It's like there's a lot of giants out there that are a lot bigger than Facebook.
That just seems like so many variables to overcome, though, and it's just like so beyond me. I'm like, there's too many what ifs and maybes to stakes everything I have on that many obstacles. That's in my point of view.
Yeah.
But
and
there's
then,
not with Bitcoin?
Yeah, there's a lot of debate. That maybe Facebook wants to disrupt Apple's iPhone. I don't want to call it a.
Okay, so there you go. You have those four and their picks, which Kevin actually gave you three: Tesla, Apple, and Amazon. Andrei, Apple. Graham, Google, and then Jeremy, Facebook. Very, very boring. All very boring picks. I think that those are, obviously would have been the greatest picks for the last 10 years, but that doesn't necessarily mean that they're going to be the best picks for the next 10 years. I actually did recently do all the financials for these groups, just to kind of, let you in on how some of that valuation looks if you're interested. And I do agree with Jeremy that Facebook actually is pretty undervalued if you take a look at what their gross profit margin is, just the percentage number, and then also with the revenue. I'm sorry, not the revenue, but what the actual figure is, right? The dollar figure, and then you divide that into the market cap. It's pretty attractively valued, and so is Google as well. So both of those are obviously great companies. You're talking about those are all pretty much the biggest companies in the world too. So let's take a look at some of the financials if you're interested. Let's go ahead and do that. Hang on a second. Okay, we're back here to this spreadsheet of some of these companies. So these companies are pretty much released back in late January and then into early and mid-February. I didn't actually bold them for this discussion because I kind of did this live. I didn't really know exactly what they all were going to say, but if you take a look at it. So one thing that's pretty amazing about Facebook in terms of at least the group of the big tech, right? Amazon, Apple, Alphabet, Microsoft, Facebook, Tesla, they've got pretty much the most attractive valuation here, on the list in terms of market cap to gross profits divided into the market cap at about 10. We've got Alphabet at about 13, really super attractive. Even, Amazon's even looking pretty good at 22. But anyway, the point is you take some of these higher growth plays, like, for example, Shopify's like off the charts over 100. Tesla's off the charts over 100. There's a couple others that are kind of off the charts and, either near 100 or something like that. And that's fine because they've kind of come up a lot in the last, since 2020 for sure. Take, like, for example, Tesla. And again, I'm, doing a price in basically early February of Tesla, which is, 878. Tesla's a lot lower now. So I didn't really run this particular report for Tesla because I would not personally choose Tesla. But if you take a look at it, the most recent 12 months revenues of Tesla is about 28 billion, right? Very, very, very far below, what it is for Facebook and for Google and Apple. Apple is actually trailing Amazon. Amazon is one of the biggest companies in the world with a revenue of close to 400 billion. But one thing that I do also, really like a lot about Facebook is their high gross profit numbers at over 80% gross margin. And again, this is their most recent. This is the most recent earnings release, and then current market cap of about 760 billion. Let's see what their price is now. Yeah, 754 billion right now, so a little bit lower. They didn't really take as much of a hit as some of the others, which is, why it's good to understand, kind of what the valuations are, of these groups. But again, the things that I look at, basically, I try to, as an investor, I'm trying to kind of make a return on that capital, right? I'm not at the point where I can just kind of cruise and just invest in value plays. I want to, really achieve a high return from my investments. And I look at gross profit, what the actual percentage number is. I look at what the gross profits divided into the market cap are. I look at revenues, gross revenues. I try to find something that is about to or has recently hit 1 billion in sales, and then ride that on up. And then I try to, if possible, find it at a market cap of 20 billion or less. Etsy is a great example of a company that I've spotted in the last, let's say, year, and in the last year have started to invest in Etsy. But in any case, let's take a look at the valuations of these again. So we have Facebook, pretty much the most, from a relative valuation perspective, of those, pretty much the lowest. They're at about 10. So, if you take their gross profit number of 70 billion, then you divide it into their market cap. It's only 10 times, what their actual share price is trading at. And then Google is the next lowest at 13, and then Apple's at about 22 right now, and then Amazon's at 22 as well, and then Tesla is off the charts at, basically, again, I didn't run this report for today, but at the stock price of 878, which was early February 2nd, when they actually released their earnings, it was at about, 140. So Tesla's just, their revenue is still pretty small at about 28 billion, and their gross profits is, pretty tiny at about, just under 6 billion, almost half of what Netflix gross profits are. So if you're considering valuation, I don't know, all these guys had some pretty good answers, but the reality is all their picks were really the best picks for the last 10 years. The question is, what is going to be the best for the next 10 years? And I think that if you, look at emerging industries, one comes to mind is cars, certainly electric cars. So Tesla, would be, a good pick for the next 5 to 10 years. But I think that particular industry, cars going electric is going to be a great pick for the next 5 to 10 years. There are some other, fairly exotic categories, like, for example, space. I don't see myself buying into space, but, I guess in the next 10 years, it might become more of a reality. In the next 5 years, I don't see it so much. But I do, in my view, the next 5 years, 5 to 10 years, electric vehicles is going to be a big economic impact. There will be a big economic impact, certainly in our country of the U.S. So of all those that they have, I actually wouldn't pick any of them. For the next 5 to 10 years, I would say the most likely chance of a company becoming bigger than any other company in terms of percentage, right, from what it is now with their revenues to what they're going to be, I would say Airbnb. That would be my pick. So let me know your pick. Give me a pick, put it in the comments section. And if you like any of this value, make sure to hit the like button, do a subscribe, and check out some of the other videos on this channel. Everybody, I'm going to put a link below. I have a blueprint I came out with. I cover investing. I cover online income. I've also been an internet marketer for years, for more than 10 years. I've got over 20 million in career earnings, not earnings, but generating revenue from the internet. I also cover credit, business credit, financial independence, and I've got a guide at the end. It's almost 15 pages. All the groups in the U.S. that give you a free credit score, and all the groups in the U.S. that give you a free FICO and the corresponding bureau with that FICO, so you never have to pay for a FICO again. And everybody, it's only $7. You'll see that link below. Thank you very much. Have a great week.